Hello and welcome to CoinDesk Research's live webinar on DeFi growth and the NFT boom in Q1 2021. I'm Christine Kim, a research associate at CoinDesk. Joining me today to host the session is Noelle Acheson, CoinDesk's managing director of research. This is going to be a really fun episode because today we're talking about two of the leading areas of innovation and experimentation going on right now in the crypto space. Noelle, I mean, a couple months back, I feel like you were very skeptical about DeFi, decentralized finance. How pro DeFi, pro NFTs are you right now?
That's a totally fair bust, Christy. I'll totally own up to that. Last year, around about this time last year, I was the one that was saying that institutions are just not going to pay attention to DeFi because it's too niche, it's too risky, it's too unaudited. They just can't. And they did. I mean, we saw starting Q3, but especially in Q4, institutions really started paying attention to DeFi, and they haven't gone away. As you're going to be showing us some of the volumes and some of these platforms, and no way is that all retail. The institutions are paying attention, not just because of the performance of some of the assets, which I think you're also going to show us, but also because of the functionalities, the cost savings, the access to new types of markets. But how pro DeFi am I now? I am very interested in innovation. I'm very interested in the new types of functionalities, the new mentalities, the new way of thinking about financial services that this is throwing up. There is, of course, quite a lot of risk involved, and everyone, please do your homework. Oh, and by the way, very important reminder, nothing that we say here is investment advice. This is for informational purposes, but the innovation coming out of the DeFi industry is definitely worth paying attention to because it is going to impact capital markets and financial services going forward in one way or another. And as for how pro NFT am I, same thing, just the innovation, the creativity. It is so much fun to watch.
Yeah, it's a really exciting space, and I'm really glad that we're, dedicating a whole webinar series to it today. Today is the penultimate episode in this 4-part series that Noelle and I host every week on Mondays at 11:30 a.m. Eastern. So next week, it's going to be the last time you guys see our faces at this time for a while. I mean, until we do the next webinar series and so forth. But basically, if this is your first time joining us, we've been tackling the 4 main sections of our quarterly review report, which if you haven't already, you can download now for free from the CoinDesk Research Hub by going to www.coindesk.com/research. For this session, as we've mentioned, we're going to be comparing and contrasting the steady growth of DeFi seen from January to March with the sudden spike in activity for NFTs seen over the same period. So we've got a short presentation to start us off, which I'm going to go ahead and share right now. But as I do that, Noelle, can you share with our audience how to share their questions on this topic?
Absolutely. Drop them into the box that you see on the right-hand side, the Bizabo box that you see in the right-hand side of your screen. Do let us know what you want to know more about. Throw in your questions. We'll do our best to get to many of them today. The ones that we can't get to, we'll make sure to reach out and answer them on our Twitter handle, which is @CoindeskData. Christine, yes, let's talk about DeFi.
Let's do it. Can you see my screen all right, Noelle?
Yeah, we can, thanks. And I'm going to go on mute because there's construction still going on. You remember from last week, there was construction going on. They've now moved from banging walls to drilling, which is even worse. I didn't think it could get worse. It just has. So I'll be off and on mute.
Okay, that sounds good. But we'll have Noelle back shortly. I mean, throughout the DeFi section, there are many areas in which Noelle's expertise is needed. So we're going to start off talking a little bit about the DeFi hype that has started to cool down in the first quarter of 2021. After a year of exponential growth and activity, we're seeing the DeFi sector start to taper off a little in relative and absolute terms. We're taking a look here at the total value locked metric. It's one of the most popular metrics for measuring DeFi growth. And we can see that from January to March, TVL, total value locked, has more than doubled throughout the quarter. But does this necessarily mean that DeFi applications have doubled in the amount of assets under management? Not really. We know that ETH is a common collateral asset used within decentralized finance applications. We also know from our last webinar episode that ETH price more than doubled in the first quarter. So this doubling effect that we see on this chart, it could be the growth that we're seeing in just the ETH price appreciating, not necessarily a growth in the assets under management by these applications. So DApp Radar, which is this excellent data provider that focuses on metrics for decentralized applications, they came up with something called the adjusted TVL metric. And this metric, adjusted TVL, it fixes the ETH price over a 90-day period. And the light blue, I guess you could call it a turquoise, the turquoise line is the adjusted TVL metric. And you can see that it hasn't grown too much between January and March. And I know I say January and March, you can see the January and March chart in our quarterly review. This is actually an updated chart from mid-February to end of April, because we wanted to keep things relevant for this webinar. But yes, the assets under management didn't actually grow all that much between January and March. And since the end of March, we see the assets under management increase slightly in April. There's a little bump. April 2021, there's a little bump there from $39 billion to $40 billion. So that's not a huge increase. And when I say that, I am talking relatively to the exponential growth that we saw in this sector throughout much of last year. TVL was rising dramatically in 2020. And just to drive that point home, in this next chart, we're looking at another metric for measuring DeFi growth, and that's tracking the value of DeFi tokens. Last year, we were accustomed to seeing percentage gains in the thousands. And this quarter, many of the top performers have still appreciated by wild amounts, but less wilder amounts, ranging from 100% to 500%. And one of the things that I want to caveat here in this chart again is the yellow line at the very bottom, which represents wrapped Bitcoin, WBTC. It's not so much of a helpful tracker. Performance for the other four are definitely something to look at on this chart. But when we're seeing the yellow line here for WBTC grow roughly about 100%, that's actually reflective of the BTC price. So wrapped Bitcoin is a stable coin that tracks Bitcoin price. And we know from the first webinar episode when we were talking about Bitcoin's performance, Bitcoin appreciated roughly 100% over that first quarter of 2021. So we're just seeing a mirror of that yellow line of basically wrapped Bitcoin tracking the appreciating price of Bitcoin over the first quarter. Noelle, anything?
I'm gonna jump in there because we have an audience question about wrapped Bitcoin. But before I go into that, one thing I want to comment on what you showed us earlier. I hadn't seen that chart. Is that it's quite astonishing that given the huge growth we saw in Q1, it is still growing. It's perhaps not growing at the same rate, but we're not seeing a collapse of what some people were calling back then a bubble. And when the innovation, okay, the growth is going to start leveling off at some stage, but the innovation is here to stay, as we were talking about before. And while we may well see a correction of interest in DeFi because it's such a new market and the interest is going to ebb and flow, so far it doesn't look like that is happening. The interest is still there.
Yes,
okay,
and to this point, this chart, the UAW is a measure for active users. I didn't include it in this chart because it was irrelevant to the metric TVL, but for the audience question of what is UAW, it's a measure of active users for DeFi applications. And you can't see that line there, but it is also slightly growing. If you go to dappradar.com, you can see that line. But anyways, yes, back to wrapped Bitcoin. Anything to add on that asset, wrapped Bitcoin?
Cool. Yes, one of the questions that we have here is what has been going on with wrapped Bitcoin? And this is actually an interesting point because last year, I don't know if you remember, Christine, we were hearing so much about the explosive growth of interest in wrapped Bitcoin, and that does seem to have quietened down a bit. Let's step back and explain what wrapped Bitcoin is for our listeners who aren't familiar with it. It's Bitcoin on Ethereum. It really is that simple. You're thinking, what does that even mean? You deposit your Bitcoin into a smart contract account and it converts into an Ethereum-based token, an ERC20 token that simply tracks Bitcoin. And what does this mean? This is actually really exciting because it enables users to use their Bitcoin in DeFi applications. Anything that runs on Ethereum, you can use your Bitcoin in that. And that will enable a much broader use, a much more institutional level of interest, perhaps even. You don't have to sell your Bitcoin. You don't have to lose the potential upside on Bitcoin. You can still be a total Bitcoin believer, but you can take advantage of some of the functionalities and some of the yields that are available on Ethereum and others. Wrapped Bitcoin is also now available on some of the other blockchains as well. And here's an interesting twist, Christine. Wrapped Ethereum. Wrapped Ethereum is a relatively new concept, but it is taking off in terms of interest. Wrapped Ethereum on other blockchains enables connectivity between some Ethereum applications and some applications on other blockchains, such as Tezos, such as Binance Smart Chain. And here's an interesting twist that I learned about the other day. Wrapped Ethereum on Ethereum. Now you may wonder, why on earth would we need to do that? You deposit your Ethereum into a smart contract, it converts it into an ERC20 version of that Ethereum. And this is important because a lot of the new DeFi applications, decentralized apps, have been built only for ERC20 tokens. So Ethereum is not usable in many of these. Convert it into an ERC20 token, and you can use your Ethereum on some of the newer decentralized application protocols.
That's very interesting. I hadn't heard about wrapped Ethereum, even though I've heard all the craze about wrapped Bitcoin. Have we been seeing wrapped Ethereum working for certain DeFi applications outside of the Ethereum platform, such as PancakeSwap or
Yes,
such?
Indeed. This enables you to use your Ethereum holdings on some of the other blockchains. And this kind of interoperability is fascinating. Now, pivoting back to wrapped Bitcoin for a minute, we haven't been hearing that much about it as we were a few months ago, but it hasn't been quiet. It has been steadily growing, and it has a current market capitalization of, if I remember correctly, over $8 billion. That's huge. I mean, it's up there in, I think, in the top, it's in the top 20 of crypto assets globally, and it is currently the 5th largest Ethereum token. It's the, I'm just checking my numbers here, it's the 19th largest cryptocurrency project overall now. And on some of the Ethereum based applications, such as Uniswap, it is the most popular asset.
And one of the really cool things about wrapped Bitcoin, which makes it different from other stablecoins, is that it's governed by smart contracts. It's not a centralized company holding reserves of Bitcoins in their wallet that you may or may not be able to audit. This is not a reference to Tether, but there's a level of transparency and automation that comes with creating a stable coin on Ethereum through smart contracts that make it a different breed of stable coins, I'd say, from the other popular ones that we know and talk about sometimes in these quarterly reviews.
Yeah, indeed. I'm checking here that about $200 million worth of wrapped Bitcoin is currently on Uniswap. I don't think it's the most popular, but it's certainly up there. And to me, that does hint at some institutional interest.
Very interesting. So we're going to move on now to the next metric that I want to talk about when it comes to DeFi, and that's decentralized exchange trading volumes. We also saw trading volumes cool down near the end of the first quarter, but still it maintained high levels that it reached by the end of last year. And while you can't see it in this chart because this chart is showing monthly volumes, some of the daily trade volumes that we saw in decentralized exchanges in the first quarter actually exceeded records set in 2020. So again, to Noelle's point, we are seeing some of this activity in DeFi cool down, but overall really maintain its high level of user activity and popularity that it had gained back in 2020. And it's worth also taking a moment to consider how this DeFi growth that we've been seeing hold steady in Q1 2021, how that's impacting Ethereum's value. As I think we actually have another slide on this, let me see. Yes, here we are. So here in this chart, we can see that Ethereum's total market capitalization, DeFi makes up about 14% of Ethereum's total market capitalization. If you take the 5 top DeFi protocols by their own respective market cap, you've got Wrapped Bitcoin in there, which Noelle had talked more about. You've got Uniswap in there, MakerDAO, Compound. When you sum all those together, that makes up around 14% of Ethereum's total market cap. And you could argue that all these applications being built on Ethereum is good for Ethereum's market capitalization. With value accruing on Ethereum, it can only make Ethereum's base level value go up. But we're also seeing that because of the activity and the popularity around DeFi, that Ethereum itself is being pushed to its limits. Fees are going too high. There's congestion on the network. Users aren't able to get their transactions confirmed in a timely manner. It does highlight some of the limitations of Ethereum today and the question of whether or not Ethereum will be able to upgrade fast enough for this growing DeFi economy for it to continue to support this growing DeFi economy. So the question of, does DeFi continue to make Ethereum as the supporting platform a lot more valuable? Because of the limitations of Ethereum, as I mentioned, I think that question does it gets a little bit gray. And I just wanted to highlight that. Anything to add there, Noelle, on the way in which DeFi impacts Ethereum's value and the nuances around that?
We did touch last week on the evolution of Ethereum fees and how they could be a problem for the network. I checked this morning, and the average transaction fee in dollar terms on Ethereum has come down quite a lot over the past few days, but it's now around $8, which is not nothing. I mean, just a few days ago, it was over $30, which is another reason why I am intrigued by this. It does show that a lot of the transactions that are happening in DeFi platforms on Ethereum, they probably have to be institutions, big orders behind them, because for retail transactions, $8 is a lot. $30 is prohibitively expensive. As we'll see when we talk about NFTs in a minute, you're not going to be paying $20 for an NFT that you really want to cherish and then pay $30 transaction fees on that. We're seeing quite a few decentralized applications move away from Ethereum because of this. We're also seeing some astonishing growth in some of the other blockchains. And so Ethereum is obviously going to be very aware of this, and this is part of their roadmap going forward.
Yeah, so we're going to hand it off now very soon to talking more about NFTs in depth. I just wanted to show how NFTs rank in terms of active users along with some of the other decentralized applications. We are seeing that the 2 most popular decentralized applications by number of active users on any general purpose blockchain platform, that includes Ethereum, that includes Binance Smart Chain, that includes other general purpose blockchains like Tezos. The top 2 amongst all of these by active users are both Uniswap and PancakeSwap. Uniswap with 55,000 active users, PancakeSwap with around 50,000. But the third and upcoming big shot, as you can see here, is this NFT marketplace called NBA Top Shot, which Noelle is going to go into more detail about, but I think it's interesting to see how NFTs have so quickly risen into the top ranks of decentralized applications. So with that, I will leave it with you, Noelle. Take it away.
Oh, good. We get to talk about NFTs. As I mentioned before, it is a lot of fun talking about NFTs because they are the perfect example of how the impact of blockchain technology on people's lives goes way beyond markets. It goes way beyond number go up. It goes way beyond portfolios and profits. It's not too much of an exaggeration, Christine, to say that NFTs, okay, maybe a little bit of exaggeration, but they've captured the world's imagination in Q1. We saw this in the numbers, we saw this in the headlines. I mean, our colleagues on the editorial team can certainly vouch for that. But why did they capture the world's imagination? Because it's a new way to interact with culture, with sport, with media. And okay, maybe not everyone is interested in the latest DeFi applications, maybe they don't understand them, maybe they don't care about crypto assets or don't trust them, but pretty much everyone can relate to music, to art, to basketball, to games. And so NFTs turned out to be in Q1 the on-ramp, the mainstream on-ramp to crypto assets of all types. And that's one of the reasons why they are so much fun to talk about. Even my daughter was telling me that her TikTok feed is just full of people talking about NFTs, people who had not been shown any interest in crypto assets before. So let's move to the okay, we're on the slide, great. We saw in Q1 a ton of interest from celebrities endorsing them, playing around with them, different types of NFTs coming to market. One thing to keep an eye on is the red items that you see that start to cluster around the end of March. They are funding efforts. A lot of the NFT infrastructure companies took advantage of market interest and started raising money like crazy, which is a positive sign because it shows the growing maturity of the market infrastructure that is going to support these things. And that has continued into Q2. So far in April, we've seen 2 NFT related companies go public, and that's NFT Investments and Tops, the trading card company that is now pivoting to NFTs. And Dapper Labs, they're behind the NBA Top Shots. They were behind the original NFT, which is CryptoKitties. They revealed a few days ago that they are raising around at $7.5 billion valuation. That's more than a lot of the well-established crypto exchanges that we've been talking about, Christine. So let's move to the next slide, please. Yes, great. It's the trading volumes. We've been seeing headlines about the collapse in NFT trading volumes because it was a bubble after all, right? It is true that the trading volumes for the major NFT platforms has declined in April, but like we saw with some of the DeFi applications, it's a natural reaction to the craziness that we saw in March. In April so far, according to non-fungible.com, the trading volume has been almost $190 million. We expect it to end up there for the month, which is not a collapse by any means and is still significantly above the figures that we saw in February. Okay, next slide, please. Fantastic. Here's just a very quick example of 2 of the top NFT platforms to give you an idea of the creativity. I wish we had time to go into more because they really are fun to go through. If ever you want to while away interesting time, log on to OpenSea.com, for instance, which is one of the leading marketplaces. There are some amazing things on there. But the two top ones, one Christine has already mentioned, which is the NBA Top Shots, which is a collectible, and you collect video snippets of amazing basketball maneuvers. And the volumes there are millions of dollars a day. Same with CryptoPunks. CryptoPunks are not a new concept. They've been around since 2017, if I remember correctly, but they are algorithmically generated images that are teensy. I think they're 24 pixels by 24 pixels, and they generate faces. And they're really quite adorable, and people relate to them, and they sell for millions of dollars. And the average daily volume for CryptoPunks is also between $2 and $6 million, depending on the day. That's not nothing. That's absolutely staggering for such an innovative and new concept.
Noelle, one audience question here that I want to ask you about this NFT craze. Are you surprised at all at the fact that people have been able to wrap their minds around the value of NFTs? Because understanding NFTs and why would anyone pay for a video that anybody can just watch on, NBA on a YouTube whenever they want, or these pixelized heads? Like, how come? Do you think that has it been surprising to you to see people and major artists just latch on to this idea that, in my opinion, it's still kind of hard to understand why it's so valuable?
That's a very, very good question, Christine, and I've heard it many, many times. That's where it's being surprising. I don't know, after what we've all seen over the past year, surprise is not really something that I have on my list of emotions these days, but I have done some digging into why, and it is hard to understand for many. If I can see it for free online, why on earth would I want to pay, millions of dollars for it? And I don't know how many of you followed the sale by Chris Christie's, which is, hundreds of years old, auction house, for a digital art, $69 million. It's a digital art that we can all see when we just log online and do a Google search. We can pull it up, we can see it for free. So why would we pay so much to own it? Why would we pay so much for a 24 by 24 pixel things? And some of them do sell millions. And why? Because of the pride of ownership. And that may sound, I can hear many eyes rolling at that. Why would you pay so much for the pride of ownership? It's a whole new emotional way to interact with culture that means something to us. And a lot of the new interested parties in this field, in blockchain technology via NFTs, they're the younger generation who already live their lives digitally and generally pay for experiences. They're more interested in experiences and than paying for experiences than in paying for things, and NFTs allow them both. It's a part of belonging, it's part of contributing, it's part of relating to the creators that you care about, and the thrill of knowing that you're helping to further a change, a fundamental change in how we all interact with culture that many people have said is a long time needed, a long time coming. So do I fully understand it? I actually kind of do. I haven't personally bought an NFT yet. Have you, Christine?
No, I'm still trying to wrap my mind around whether or not this pride of ownership is really worth millions. I mean, let's be real here.
And then there's the reselling. If you're going to spend millions on it, you're hoping as an investment, and let's assume that most of the big art investments, again, you hope that you'll be able to resell them at a much higher price. It really is gambling, not just on the continued interest of this, but also the continued engagement, the continued creativity, and the improvement or the spread of understanding of how this is just a new way of consuming culture. We'll see in a couple of slides where I think this might be heading, and we can talk a bit more about that at the end. But this slide shows that while sales may be declining slightly, the headlines talking about a crash are very misplaced. What we are seeing actually is a pivot. We're seeing collectibles, for instance, they were the boom in March. NBA Top Shots are one of them. CryptoKitties were the originals. The more you have, the more your collection is worth, and everyone knows the thrill of collecting. You don't need to be online to understand the thrill of collecting. We all had either our I guess stamp collections if you're of a certain generation, or your trading cards or whatever when you were little. For me, I think it was stickers, and I'm that old. But collectibles may not perhaps be the most, they're still the highest volume of the NFT sales, but the interest is perhaps dwindling a bit and pivoting to more emergent applications of NFT technology, such as game items and metaverse properties as well.
What is metaverse?
Metaverse, I'm so glad you asked. Metaverse is so cool. Metaverse is virtual reality and decentralized virtual reality, as exemplified by Decentralized, for instance. Nothing we say is investment advice, is a whole new way of looking at it. We all, at CoinDesk, we've been playing around with virtual reality for a while. Many of us have headsets, and we even had some meetings last year in virtual reality conference rooms. But it's a fascinating way to interact, especially in lockdown. I mean, it's opened up horizons for so many people, but they belong to a certain platform. Facebook could decide to just pull Oculus and all of the investment that people have been putting into developing applications, so that we disappeared. Virtual reality decentralized is one of the reasons Ethereum was created. It's so that no one can pull the underlying platform. The investment that you make in building applications will be there always. It cannot be turned off at the whim of a centralized party. And so the metaverse is decentralized land. You can buy land and it could be objects that you can take from one building or one application to another building. It's a fascinating innovation. There's going to be so much creativity coming from that. I think the metaverse applications, their decentralized applications, will be one thing to watch, especially in the second half of this year. So next slide. This is where some of the fascinating innovation that we've seen since the end of the first quarter comes in. The innovation has not been quietening down along with the sales slightly, but it's been accelerating. In fact, we've seen new types of participants come in. The New York Stock Exchange has minted NFTs. The New York Stock Exchange, what they have minted the first trade of some high profile listings as an NFT. And they are, Christine, your screen is now split.
I think it's good now. Sorry about that.
Okay, cool. Just need to get in know. They've minted that and they're giving them to the companies as part of the service that they offer. I think that's absolutely amazing. And again, it's not necessary, but it's an extra touch and it means something. It's an emotional moment that has been enshrined in blockchain technology. We saw Christie's in Q1 auctioned the Beeple artwork for $69 million. Now all of the other auction houses are getting involved as well. These are traditional auction houses that have been operating for a long time. They are now selling NFTs. And one particularly interesting one that I saw the other day was from the Philips auction house. And this is another innovation that we haven't seen the last of. It's just getting started. Programmable art. The CryptoKitties back in 2017, they were sort of programmable art where your cats could sort of mate and have kittens, but this is an entirely new level. The artwork you see on the left is called the replicator, and it's for auction. It will then copy itself X number of times. Each copy will then copy itself X minus Y number of times. There is a cap on the number that can exist, and randomly it sometimes jams, so you don't really know how many there are going to be. And this is fascinating. This makes the investment in this artwork of a whole different level. It's not just the pride of ownership. It's not just that you really like that. It makes you feel something. It's not just that you think you'll be able to sell it at a higher price. It will produce additional copies that you can sell, and every secondary sale will send some royalties to the original creator. I think that's going to be fascinating. We're seeing a whole new range of new list of celebrities coming in as well. That is only going to broaden even further the engagement with this new type of technology. Now, one thing that we're going to perhaps talk about next week when we focus on the regulatory developments in the first quarter and since then, and we have a very special guest, our colleague Nick Day, who is one of the industry's foremost experts on crypto regulation, will be joining us. We can ask him then, Christine, what about the regulation of NFTs? If you buy an artwork and then it sort of spins out dividends, is that a security, and should it be regulated as such? What do you think, Christine?
Whew, that is a very loaded question. And honestly, I'm going to defer to Nick on this one because I cannot begin to start getting into securities law without someone to really make sure I'm saying the right things, nor do I know enough about that. We're just about at time here with our webinar, and with all of these questions, I do want to highlight that next week we are going to have Nick on here to kind of review and talk about in more broader, bigger narrative terms what we're seeing in the trends of Q1 2021. So I just want to plug next week's webinar to please stick around, come back on Monday to get more of these questions answered, and also to hear Nick's thoughts on the rest of what, from a regulatory perspective, the rest of what happened from January to March. So thank you so much, you guys, for joining us today to discuss DeFi and NFTs. As a follow-up, everyone who tuned in today, you're going to be getting an email in your inbox with a link to where you can download our full quarterly review, and we'll also be sending out a link to the video recording once it's uploaded. Finally, please do stay in touch with us, stay in touch with the CoinDesk research team for any follow-up questions or comments. You can find us on Twitter. Our handle is @CoinDesk Data. There you can see all of the information here on this slide. Yes, and for Noelle or I, you can follow up with each of us individually. You can find us on LinkedIn and Twitter through our handles by going to the speaker tab on your event sign up page. I think that's it. I don't think we've missed out on any other information. All of this will still be in the follow-up email as well. Until next time, see you guys later.
Thank you all so much. Talk to you soon.